Hey guys, what's going on? Welcome to this monthly stock market recap. I'm Robert Montez, financial advisor with Link Financial Advisory. Today we're going to be going over what helped the market, what hurt the market, and your key takeaways for the month of April 2025. So let's hop into what helped the market. There was a couple of bright spots this past month, despite all the crazy volatility that we saw. We saw industries such as utilities be kind of like a safe space for people when it came to their investments. We also saw the Fed lowering interest rates by 25 basis points. Obviously, when rates come down, it does make it easier for companies to borrow money because it doesn't cost so much, and the same for individuals. So that's designed to help drive the economy. Unfortunately, a lot of that was overshadowed by what hurt the market. The big word of the month was tariffs. I don't think that's a surprise. So the tariffs that we saw between the United States and China really was creating some trade tensions, and that has created uncertainty. We saw the VIX index, which is also known as the fear index, then spike, then decline all month. So it really just kind of points to the fact that things are all over the place and people don't really know what to expect. As far as key takeaways, I guess before key takeaways, one other thing that really also hurt the market were tech stocks getting just kind of smashed. A lot of that had to do with, I guess, some loss of interest in AI. But again, that's been all over the place. Week by week, we saw some months where AI was driving things like NVIDIA to do really well, and then it pulled back. So again, it was just a turbulent month. As far as key takeaways, I think this past month really showed the importance of maintaining a long-term perspective. Overall, we saw the S&P 500. Yes, this past month was down about, I believe, it was 8.8%. We saw the Dow down about 5.5, and then we saw the Nasdaq down. I believe it was a little bit over 13%, maybe 13 and a half, somewhere in there. However, if we look long term, the market is still doing really, really well. Just for a little bit of perspective, if you were investing right before 2008 and the market collapse happened, you had a $10,000 one-time investment. At the worst of the period of time, if you were tracking the S&P 500, you would have been down to about $4,400. Now, if you would have held on to those investments for 10 years, just rode it out and got 10 years past, your investments would have grown to about $19,000 if you're tracking the S&P 500. And between now and 2025, it would have grown to about $50,000. So I just say this to remind people that long-term investing should be the goal when we're thinking about retirement or saving for the future, not chasing short-term profits, because there's always going to be ups and downs. If you have questions, if you'd like to connect or just get a second set of eyes on your portfolio, please feel free to reach out. We're here to help. Appreciate you guys watching this. If you'd like a written copy of this, feel free to reach out to me. I'll post my email below and we can send that to you as well. Thank you so much.